Hello fellow traders, and welcome to this new initiative here from my desk. This is a completely new channel, it's a completely new type of video, and it is a project that I have agreed to start. Many of you have requested it. I've agreed to start it so that it doesn't, you could say, pollute my normal Building Freedom channel, where I basically, mostly at least, talk about stocks and the overall economy and so on. So this channel, these types of videos will mostly be about trading on a shorter term. It'll be about Forex, meaning all the currencies, the larger currencies. It'll be something about commodities, maybe a bit of indice trading. I'll try to explain what I do. It's basically quite simple what I do, and I'll try to explain how I work through my different setups. I'll show you my trades, also the losing ones, because they're absolutely not all winning trades. I'm also sharing these trades, most of them at least, on Twitter when I remember it, and I'm also starting up a new Facebook page just for these trades. So as you can see, there's nothing fancy put in here yet. There's no intro, there's nothing basically. It's just me trying to communicate how I do it. So I might stop it again at one time when I have explained the basics of what I do and people think that they can take that and copy it on. So let's get straight to it. First of all, what do you need to understand a lot about when you are trading the currency markets and the commodities is the basic fundamentals of economy, because that is what is controlling the overall direction of the currency market. I use my FX book here. You can always choose what kind of time frame you'll be looking at, and you can also choose, let me just see if I can show it here. Under this one, you can choose that you'll only see the high impact and medium impact, and then just press filter again, and it'll show you only the medium and high impact, just to get it sorted a bit out. So what I'm looking at here are all the major countries from the major currencies, the New Zealand dollar, the Swiss franc, and so on. I do have China included here, even though I'm not trading the Chinese currency. Of course, there's United States and so on. And what I'm looking for are numbers from the different countries that I know move currencies. That could be, for instance, what basically moves the currency most is interest rates. If interest rates are going up in a country, all other things equal here, if interest rates are going up, then the currency is going up. If interest rates are going down, then the currency is going down. And then a lot of the other numbers, that could be inflation, that could be job numbers, it could be productivity numbers, and so on and so forth. They are basically, the traders are speculating whether these numbers are pushing the interest rate up or down. I'll get back to that. I think I'll make a specific video just about the fundamentals. But it's just to say that I'm looking a lot on these numbers. And having been trading this week, there's definitely a couple of things that are moving the markets right now. First of all, there is the speculation about the Delta variant, the COVID-19 and so on, and how that affects the demand for oil. So oil has been going down quite a bit, and I have been short oil. I closed it Friday afternoon or Friday evening, and that means, and you have to know that there are certain what is called commodity currencies, meaning that there are currencies that normally correlate with oil, for instance. So when the oil is going down, we will see, for instance, New Zealand dollar, Australian dollar, and Canadian dollar also going down. It can fluctuate, but that is the main rule of thumb here. Also, when there is a bit of turmoil in the market, some nervousness, people are talking about crashes, and we might see a bit of volatility in the market, you will see some safe haven currencies going up, and that is definitely Swiss franc, it is Japanese yen, and also United States dollar. Right now, there's a lot of focus on Fed in United States, if they are going to start tapering their purchase of bonds. If they do that, that could definitely press the interest rate up, and that is why there is an upwards push on on the US dollar. So what I'm trying to give you a picture of here is that you need to have quite a good grasp of the overall fundamental macro picture of the world, both on a numbers basis like this, but also on what is going on. If Powell, for the Fed chief, if he's talking, then what is he talking about, and how will it affect my position in euro, dollar, or whatever? You have to remember that every time you, for instance, are long in a currency pair, it could be long euro, dollar. That means that you are long euro, but basically also short the dollar. So every time you take a long position, you're actually both long and short. You're long the first currency, the base currency, so in euro, dollar, that will be the euro, and then you're short the other. So we want to find good trades where one currency is strong and the other one is weak. So that is one thing. You need to get a good picture here, and that is no easy way to do that. I will give you updates during the week here, and I'll write it in the new Facebook group. But you need, if you want to trade currency, this is my opinion, of course, you need to know quite a lot of what is going on in the world. All right, that's one thing. Then what I do, and I can give you a picture of this. This is a relative strength measurement. There are a lot of them on the internet. You can download them to TradingView. They are for MT4 and MT5. But what these lines shows is how each and every currency is doing related to the others. So for instance, when we're looking at this on a daily chart, you can see that the red line here is the Japanese yen. When that is going up, it means that the Japanese yen is going up towards most of the others currencies. So for instance, the Japanese yen towards the Australian dollar, then the yen is strong here. It is also stronger than the euro maybe, and the Swiss franc and so on. So when this is going up, we know that overall in most of the pairs the yen is gaining strength. And here we see that the blue line, which is the Australian dollar, these two are crossing each other, and the Australian dollar is going down, meaning that the Australian dollar is losing strength towards many of the others. So we want to find combinations of currencies that are stronger going up and are weaker going down. In this one here, you can spot, for instance, the Australian dollar. We can see that the Australian dollar, the last day, this line have been going down, so that gives us a red here. The same with the Canadian dollar. We can see that the euro is green, meaning that the last day this orange brown line has been going up. So we can get a quick overview of what direction are they moving in, and I'm doing that every morning. I'm getting a good grasp of where are these different markets moving, and I'm also doing it on a 4-hour time frame, sometimes down on a 1 hour, but mostly on a 4-hour time frame, where you can see some fluctuations during the day. For instance, right now you can see that the Japanese yen is kind of topping off here, and on the 4-hour time frame you can see that it's actually starting to lose a lot of strength here, and that should tell us something about where to place our trades. So, but these are affected by the news and the overall sentiment in the market. More than this, I'm also every single morning I made this Forex. Let me just find it here. I have this group called the Forex Indices here. And there are 8 of them, meaning the JXY is a Japanese yen, and that is an overall index that is a weighted index of several different currencies towards the yen. So if we're looking at this, we can see overall where the Japanese yen is going. Now this is not towards something. It's not the euro yen or the dollar yen. This is the yen of towards a basket of different currencies, and we can see right now that the yen is kind of stuck in a trading range. You could see here it has been going up over the last days. This is a daily 4-hour, 1 hour, and 15-minute charts here. I know it gets a bit small when we're looking at them in screens like this, but you can see that the yen has been in quite a volatile movement here, up and down between these limits. The last days they have been going up, but then losing a bit of strength here. Looking at the dollar index, it has been extremely strong, and that is of course partially due to the fact that, or actually mostly due to the fact that Fed is talking about tapering, meaning buying less bonds each and every month. Right now they're buying at a speed of $120 billion each month, 80 billion of treasuries, 40 billion of mortgage-backed securities, and they will start doing less of that. And doing less of that will mean that there's a lesser demand for bonds, meaning that the price will probably drop, sending the interest rate upwards on the US dollar. And when the interest rate in United States is going up, the US dollar will go up. So as you can see here, the dollar index has been going up. It had a couple of days of weakness here, and then it shot straight up, making a new higher bottom here. That's quite significant. All right, the British pound has had some really tough weeks here, been sent down. We can also look at it at a weekly chart here. Really been smashed down hard here. But right now it is caught in this area. Let's just find it here again. And it could be going up. I will be looking for some tendency of a retracement here that could send us in to some long British pound trades. The Australian dollar is going down as long with as the oil is plummeting. The New Zealand dollar is going down. The Canadian dollar is going down. However, the Canadian dollar, we can see that on a 4-hour time frame here. It really got some strength back late Friday here. So that is something to keep an eye out for. But that could just be a new lower top here on a 4-hour time frame, and then be sending that down, and we would be looking for shorting the Canadian dollar. We have the euro here, also broken a quite significant bottom here, trying to get up, but it may being rejected here. And if it is rejected Monday morning before noon here, I will be looking to take some short euro trades maybe. Then there's the last, the Swiss franc, also been going up, dropping down, and then going up again. It has been quite volatile time for these safe haven currencies. Now I also have the oil in here, and as you can see, the oil simply just fell out of the sky. And as I tweeted when I took my short trade in oil, and it went down to 1.5 times my initial risk, and I took it off Friday. If it hadn't been Friday evening, I might have been letting it run, because I think the oil will drop further. The Delta variant is definitely putting a strain on the demand for oil, and combining with that, the OPEC Plus, which is this organization of larger and smaller oil producers, not including United States and Canada, I think it is, but many of the other oil producers, they have decided last year with the COVID crisis, they reduced the oil production quite a lot because the oil future went negative, as you might remember. But they have agreed finally to start producing more oil. So they are increasing the daily production of oil with 400,000 barrels. And they are doing that in steps each and every month. So at the first of next month, they are increasing the production with 400,000 barrels per day again, and then the first of October and so on. So there will be an increased production supply of oil up towards New Year, and at the same time, the Delta variant might put some limits on the demand for oil. So I think that we might be able to see the oil down in 40 to 50, and that is a WTI here, the US crude. The Brent crude could of course also be traded just as well. So that is the overall picture. What I also do, and I'm trying to give you an overall picture of how I actually work with this. And some of you have been asking me, how do you have time to look at this outside all the normal stock analysis? But this is actually a very crucial part of that analysis I do on the stock market as well, because these two are playing together. You cannot just look at the stock, or you can just look at the stock market, of course, but the stock market and the currency market and the commodity markets are inflicting on each other each and every day. So looking at the currency market and the commodities, can give you a very good indication as to where certain stocks are going, where are oil stocks going, where are green tech stocks going, and so on and so forth. If you can see that all of a sudden there is inflation play in the currency and commodity market, that affects certain stocks in certain ways as well. So they can all give indication towards each other. So what I have done here in TradingView, and that is why I'm using this, is that I have made 8 different currency groups. Here we have the Australian dollar group. And as you can see in here, I have put all the 7 pairs where Australian dollar is a part of. Now, normally you wouldn't put Australian dollar in front of every single pair here as a base currency, but I have done this because then I can quickly scroll down and see Australian dollar is dropping towards the United States. Australian dollar is dropping towards the euro. Australian dollar is dropping towards the Swiss franc, and so on and so forth. So I can get a good overall picture in a matter of seconds as to where is the strength and weaknesses. We have the Australian dollar here. We also have the Swiss group here. And as you can see, Swiss towards the dollar, towards the euro, towards the pound. Okay, so we can see that the Swiss is actually very strong towards the pound especially. So there might be something we should work with there. Swiss and yen are both safe haven currencies, and that is why I'm rarely trading them up against each other, because they are kind of affected by the same factors in the market. And you can see they are just trading sideways right now. And you can see, of course, the Swiss towards the Australian dollar, the Canadian dollar, and the the New Zealand dollar is going through the roof here. So there is some very good trades to be taken here, I'm certain. So I'm doing this with every single group. I'm using 15-20 minutes every single morning to get a good overview as to where are the different commodities and currencies going, as you can see here. And quite quickly I get a picture of what is the focus of the day. That is what I'll try to put out on my Twitter and my Facebook, the mornings where I have enough time for that. And yes, I'll try to communicate that picture towards you. When I have done that, I go into my group where I have all the normal currency pairs here, and I go through them one by one. And I'll not go through all of them today because that'll just tire you, I'm sure. But what I'm basically doing is that I start out with my daily chart. And on the daily chart, and sometimes I use a DMI or some other trend indicator, but basically I am a structured trader. So my daily chart I use to get a good picture of where is support and resistance, where are there supply and demand in the market by all the big players. And as you can see, when we are getting close to, and now we didn't know this was the bottom, but it was rejected from here. And when it got up against here, I was looking for short trades because I knew we were going into a potential resistance area here. It could have gone straight through it, and then I might be looking for some long trades instead. But when it turned around, I started to look for short trades. Now, I actually didn't in the Australian dollar, Canadian dollar, because they were both commodity currencies, and in the current market, they are basically moving in tandem. But let's have a look at another one. For instance, the Australian dollar versus US dollar. Now, on the daily chart, as you can see, it had been working its way in a sideways range. It broke down here, and that was my signal to that I could start looking at some potential short trades. Now, what I did here was I went to the 4-hour time frame. We can just let's just put a line in so you can see what I'm doing here. This was the break. Let's see if I can draw it in here. This was the break here. Now, what I do then is that I go down to my 4-hour time frame. And this was the move down on a daily time frame. Then I'm waiting for a retracement of at least 1 to 2 4-hour bars here. And when I have that, I go down to my 1-hour time frame and I start to find some interesting trades. Now, this was a breakdown. This was a move up on a 4-hour time frame. And then what I'm doing is that sometimes I'm taking a trade on a break here, like this, here, maybe half a position. And then I'm looking for retracements into this little zone here where I can see there have been a bit of trading towards the top. And when we get up here, we get up and touch that and get sent back down, then I could take another good short trade, something like this. I could put another half position on here, and I could just trail it, either take 1.5 to 1, meaning 1.5 times my initial risk, or I could move my stop down along with the movement in the market. So I could put my stop up here, and when the market moved down, formed a new top, was sent down, I would move my stop down here. And again, and I often take many of my positions off close to the weekend. But a trade like this, let's say we just took the one furthest down here, I would have put my stop somewhere up here. Now this could easily have given us 1.5 R here. And yeah, had we been going down here and waiting for Friday afternoon, we could have got 2 to 2.5 R out of this one. So that is basically how I do it. I look at the overall trend on the daily chart, I look for retracement on a 4-hour chart, and then I time it on a 1-hour chart, sometimes even down on a 15-minute chart, but that's not too often. Right now I'm in a couple of positions here. You can see my New Zealand dollar Swiss. That is a play where I'm going for a drop in the New Zealand dollar and then some strength in the Swiss. Now I took that, when did I take it? Let me see, I took it around here Friday, and it just moved sideways. But as you can see, the New Zealand dollar simply ended the Friday with a complete collapse here the last 15 minutes. So I'm quite confident that this one will be sent into the positive when the markets start again. The same with the New Zealand dollar yen. As you can see, it was up, it was down, it was a bit all over the place. But again, Friday, the last 15 minutes, it collapsed. I have a position as well. It's not normal that I have so many positions with the same pair here, but I do have one in New Zealand dollar as well. And that one is actually very nicely in the positive. So I think it can go further down. Then I have one in gold. That is the last one I have active right now. And that has been a complete mess, and that is because there are some interest rates in there, but there are also some insecurity in the market. I'm short the gold, so I'm planning for it to go down, if you could say that. And that is also due to there's a negative correlation between gold and the US dollar. And since the US dollar is going so much up, it should push the gold down. But the nervousness in the market has actually made it so that there's a big demand for gold as well. So I'm not completely certain that this will turn out as a winner. But as long as I can have somewhere between 55 and 65% winners here, and I can have larger winners than losers, then it is actually possible to make some quite good gains in this market. I hope this gave you a good overview as to how I'm working with currencies, commodities. I'll try to put up a video 2 or 3 times per week, just short overview videos about how I see the market, what trades I'm in. But you can also follow me on Twitter. I put the tag under the video here, and I'll also get my new Facebook page set up so that you can follow it there. This is just a little hobby project, so don't expect too much of it. But I'm glad to help if some of you need a bit inspiration as to how you could trade these markets. Now also, this video is also sponsored by NSB, the NS broker here. You might know it from the other channel. NSB is actually very good if you want to trade these currency pairs. It is a pure ECN broker, which is fantastic when you trade these, because you're not trading against your broker. Your trades are put directly out into the market. And you also want a broker that is licensed in all the right ways. And there you can see that NSB is licensed by both the MiFID, the EU here, but also all the larger markets in Europe, and also the Finanstilsynet, the Danish regulatory governmental office here. So it is pretty much as safe as it gets. So NSB, thank you for for sponsoring this video. It makes the whole work with these videos a lot easier. So take a look at NSB and put a link to them below. But I hope this gave you a bit of inspiration. Write me some questions under the video or on the Facebook page when we get up there. I'll put a link to that underneath the video as well. And yeah, let's see where this channel goes. Share it with everyone you know. If you know someone interested in day trading, swing trading, currency, commodities, indices, and so on. That's all for now. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye.